Everything I'm going to mention in today's video, do not rely on it solely. I'm not an expert in mergers and acquisitions. Do not treat it as any buy and sell recommendation because I don't want any liability with it. Treat this more like coffee shop talk, something like that. I share with you freely what I think as well as my interpretation because my own father has certain stake in it. That's why I've gotten this letter and I've decided to do a sharing with you behind the scenes on what I think this whole saga is about. Let me pull up for you what exactly has happened to Suntec Reit. Suntec Reit now is receiving an offer from the Tang family, and their offer is $1.16, and it was triggered because they have recently increased their stake through open market purchases. They went and buy from the open market and they crossed the 30% mark, which triggers this mandatory offer. So this offer is $1.16 only. And just in case you don't know what is a mandatory offer like this is triggered and there are clauses with it. This one has a condition that their company need to acquire more than 50% before the offer is valid. So until now to then, the offer can lapse, and if you have accepted and the offer lapse, it will be refunded back to you. But $1.16, that seems a bit cheap, at least to me, because if you see over here, even RHB has recommended people to reject the offer. They believe it severely undervalues Suntec Reit. So what exactly is Tang family doing? Are they really so not sure what kind of a right offer to privatize it? Maybe not so. Let me explain to you a little bit more. Now, who are they? I think we should put some flavor to things also. So Gordon and Celine Tang, they come from China and they now reside in Singapore. So they are reportedly close to Bush family and they have ties to former Prime Minister Yingluck from Thailand. So they are actually the controlling shareholders of Singhai Group. And Singhai themselves, they were privatized by the Tang family. And this was in 2021. And to explain to you the offer, while it is below the NAV of Singhai, most property developers are below NAV anyway right now, that offer was a 40% or so premium over its last traded price. More importantly, the Tang family back then already controlled 78%. They just needed 12% more and they can privatize it. Privatisation has other benefits. There's less cost in listing, there's less reporting, they can shuffle around assets a lot better without needing a lot of voting from minority shareholders and stuff. So again, the Tang family is very savvy in this. To show you some other moves they've made, they've actually privatized a household construction company, Chip Eng Seng. This was done in February 2023. And what they actually did was they actually bought a stake from the founding family of Chip Eng Seng. Back in 2018, they actually paid $201 million to buy 29.73%. Again, they strategically chose less than 30% so that they don't need to trigger a mandatory offer until they were ready. That adds flavor to today's story of Suntec, but hold on for a while more. Let me map out for you the entire journey. Chip Eng Seng was doing relatively well. The Tang family bought from the founding family 29% in 2018. And through some other rights and stuff, they gradually built their stake past 38%. Then when the share price was down for Chip Eng Seng, after the COVID crash, they made an offer to privatize it. That was again a significant premium to last traded price. So from this, I make my own reasonable analysis that sometimes they do hostile takeovers and they are very experienced at it. So just now I led you with the question, what exactly are they doing? So if we pull back up just now what we mentioned about Suntec, this is just a mandatory offer because they crossed that 30% mark and they intentionally did it. It is almost impossible that I bought from open market and then I accidentally crossed the 30% and I have to offer now. It's not, it's intentional. And in my opinion at least, the price of $1.16 is not even any premium to last traded price. Just now again, Chip Eng Seng, when they wanted to privatize, they gave a premium, correct? Singhai, when they wanted to privatize, they also gave a 40% premium. That is why this offer, in my opinion, the chances of it succeeding is very low. Again, my opinion. I'm not an expert in mergers and acquisitions. I'm just guessing what will be the outcome. If you were to look in terms of Suntec Reit's shareholding, you would see that the Tang family owns right now that 30% stake, and ARA, together with Straits Trading, they act as a group. They control only about 13%. Suntec's chairman right now is Ms. Chu Kiat Kim, who's also Straits Trading's chairman. So could there be a power tussle coming up I'm not too sure about it yet. But what I'd like to highlight also is Suntec Reit is actually very fragmented in terms of its shareholding. 45% or so is held by minority shareholders and floating outside the market. In my opinion, the Tang family knows that, of course. I would be guessing they are playing a very long-term game, a 10-year game to consolidate power first. Until they are ready, then they make a serious voluntary general offer to privatize Suntec. But to do so, they definitely need the stake from ARA and Straits Trading. If they are not willing to sell, they can never cross the 90%, correct? So that stake definitely needs to be acquired over, or at least the blessing needs to be given by them. Doing a privatization is not impossible and not difficult. Let me show you some examples that I've seen through being an investor in the market. Most recently, another REIT, Frasers Hospitality Trust. Their parent company wanted to privatize it, but they didn't do a voluntary general offer. They tried to do a scheme of arrangement. In my understanding, is just changing the share structure with this private offer. And in doing so, this scheme needs to be voted in. So when they made their offer in September, share price of Frasers Hospitality Trust surged up by 40%. And then they went to a vote. Unfortunately, they couldn't cross the 75% mark needed to mandate it. So what happened? Share price of Frasers Hospitality Trust collapsed after that. Recently, share price has been surging again, and I'm not too sure what's going on exactly behind the scenes. If you were to look in terms of who controls the company, we would see that the Thai family, which is TCC Assets, they own 60+% of it. I'm not too sure whether it's a miscalculation on that scheme of arrangement things to privatize. But to me, it feels like they targeted 70 cents. If can privatize, great. If cannot, we'll leave it as it is. Kind of approach. Again, privatizing is not impossible as long as you can find the right price. Back in 2016, Mr. Osim took it private with a $1.39 offer. That was a 40% premium or so. And highlighted over there, he actually raised his offer price, correct, from $1.32 to $1.39, even though it was already at a premium. That shows that he was serious in taking it private. He's done his cost-benefit analysis. What about Breadtalk? I don't even know. They were also once a listed company. Founder Mr. Quack actually took it private at 77 cents, and that was also at a 20% premium. He already had controlling stake, and that's why it's not too difficult. Again, it's finding the right price. Great Eastern, very recently, taken private also at 30% premium from their parent company OCBC. That again was a voluntary general offer. And by the way, I've done a previous video on my stake in Great Eastern. You can check it out over here or towards the end of this. At that point of time, they already control 80+%, and it's just about finding the right offer to move it past 90% and take it private. So back to Suntec Reit. Is the Tang family going to take this private? For me, the answer is quite clearly no. If they were serious, if you look at this price chart, you would realize that their offer price would have to be $1.80. Maybe not $1.80, $1.60. Correct? $1.16. How to take it private? And it's not like they don't know about it. That's why, again, in my opinion, they are consolidating power as of now and playing a very long-term game. Whether as a retail investor, you're keen to play that or not, I leave it up to you. But in my opinion, a full privatization offer is not in sight yet. I would even think that it's easier to privatize some other REITs that they have a stake in than Suntec, which is so fragmented in share ownership. There seems to be no blessing also from ARA that they would sell at this price. An example of what could be easier for them, if I were to advise them on it, might be on OUE Reit actually. Let's look at its shareholdings, and you would realize that they own 20% plus already. Founding family owns about half. If they were to be able to buy away that stake, just like how they did in Chip Eng Seng, then yes, it's much easier to consolidate big power and take it private. What I'm hinting to you again is, these are multi-billion families. They are not doing passive investing. So don't mistake that. Hopefully I've painted a very interesting story for you to learn a bit. Because I've invested in the Singapore markets for 20 years, I've seen my stakes sold before in SPC, I've seen my stakes sold before in Wheelock, and most recently I've seen my stakes sold away in Great Eastern. Just now I mentioned I have a previous video on it, check it out over here. And if you want to check another video out, you can actually check out this, where I'll invest 100,000, and the first name is someone who is a controlling stakeholder and is building up his shares. Could he take it private? I'm also curious to find out, and check out that video to find out more. Take care as always, goodbye.